Hey, what's up, stock compounders? Brad here. So today I want to talk about SPACs, and Chamath today announced a merger with IPOE and SoFi, which is pretty interesting. But let's back up a little bit. What am I doing as a value investor in SPACs in the first place? So I'll just give a short kind of, how that came about. So I was poking around at Corner of Berkshire in Fairfax, which is an incredible message board for value investors. If you aren't on there yet, do it. It's like $23 for lifetime access. So I was poking around in there trying to figure out, what can I do with cash until a compelling deal comes along, right? We hear from Ray Dalio, cash is trash. The government is printing all kinds of money. Who knows what's going to happen with inflation? Likely, seemingly to go up in the near future. And obviously interest rates are at an all-time low. So it's hard to find safe things to do with cash that'll give some kind of a return until that big fat pitch comes. So anyway, I was digging around in Corner of Berkshire in Fairfax, and I found an investor who has a really interesting approach with SPACs. So basically, he treats SPACs as a place to park cash, okay? Kind of this upside without downside play. And the idea there is you've got a floor on the SPAC, which is the cash value. It shouldn't drop much lower than that. So it's kind of a safe floor. In the case of IPOE, it's $10 per share. Okay, but so that's the downside. The upside, obviously, there's been it's just kind of crazy with SPACs. How excited people are about them, how quickly prices are shooting up after one of these big SPACs announces which company they're going to merge with. So let's talk about this one. IPOE today announced a merger with SoFi. Okay, and I'm not even really going to get into what SoFi does. That's not why I parked money with this SPAC. Okay, if you want to find out more about SoFi, check out Chamath on Twitter. He's got a one-page kind of write-up on his investment case for social finance. You can also go to the SEC, type in the ticker IPOE to look at some documents there. And there's also some good write-ups on Seeking Alpha. Why does this certain SPAC trade at a premium? That was actually from yesterday, January 6th. That was interesting timing. And then today, of course, the merger was announced. And so what did the stock do today, right? Let's take a look at that. So I bought about 2 weeks ago, IPOE, using this method of parking cash in a SPAC where I believe in the jockey, right? Of course, you want to find someone who's behind the SPAC who knows what they're doing. Because, if you have a SPAC where, the manager, the whatever you call him, goes after a company that's not a good investment, it's feasible that the SPAC, that the price after the merger is announced could drop below the cash value. So you want to kind of weed out the SPAC universe of jockeys that are actually worth betting on. And to me right now, that's really Chamath and Bill Ackman. Is another SPAC that I'm taking a look at. But IPOE, I bought at $11.87 about 2 weeks ago on December 23rd. Today, it went from $12.11, peaked at $20.07, and now we're at about $19.14. So all in all, over 2 weeks, I'm up 68% on this particular investment, this SPAC, where I really just, parked my cash because I'm seeing it as a, upside without downside play. And this really reminds me, I mean, it's not totally similar, but of the play that Monish Pabrai used for upside without downside back during the dot-com bubble. He found Silicon Valley Bank and realized the stock price for Silicon Valley Bank was trading somewhere pretty close to the intrinsic value of the bank. But what a lot of people didn't know is that Silicon Valley Bank was kind of funding all of these startups in the tech space. And so they were getting warrants, right? The bank was getting warrants in exchange for these deals that they were doing with these tech startups. And the warrants weren't really disclosed in the public filings. And so, because of all these warrants, the price really popped once it became known that these warrants were owned by Silicon Valley Bank. And so that was a brilliant kind of upside without downside play by Monish Pabrai, being aware that he's in the midst of a bubble. So he doesn't want to bet on, the companies that are in the bubble. He wants to find a company that can benefit from this bubble. But if the bubble pops, his downside is protected. And similarly, that's how I'm seeing some of these SPACs. So I just wanted to share this strategy with you guys. It's not like I'm putting a lot of my cash in these. I'm just kind of testing it out at the moment. But it makes a lot of sense to me. And it's a way to kind of dance while the music is playing, but also have that downside protection. So it's, I thought it was just a brilliant insight that I picked up from corner of Berkshire and Fairfax. So the big question for me now, right? Do I continue holding this thing, or do I get out? Do I just convert back to cash and wait for the next SPAC that looks interesting? And I'm feeling kind of mixed on that. Obviously, this thing isn't a sure thing yet here. The merger was announced today, but the deal hasn't closed. It usually takes a couple months for these things to actually close and for the ticker to, turn over from IPOE, probably in this case, to SoFi, if that's not already taken. But anyway, guys, that's my big question. How long do I hold on to this thing? And my sense is, well, obviously I want to learn more about social finance, what they do, what their prospects are for the future. I don't invest in startups. That's not kind of my approach to investing, because it's really hard to estimate where a company is going to be in 10 years when they're not even profitable yet, right? It's much easier for me to look back 10 years at a company that's, they can show me what they've done over the last 10 years, kind of as a public company, to make me much more confident in my projections going forward. But I can't really do that with social finance. And so that's what I'm wrestling with, guys. Let me know if you have any thoughts on that. Because, my thought process is, well, why sell if there's nothing I want to buy right away, right? I initially treated this as kind of a place to just to park my cash and hopefully get some upside out of it. But if not, at least, if something comes along, I can kind of cash out to buy that thing. Well, I don't have any of that thing to buy right now. So at the same time, if it's completely unreasonable for this thing to have popped 68% over the last 2 weeks, I mean, really over the last day, then maybe it makes sense to just, get out while I'm ahead and wait for the next opportunity. So anyway, guys, I'm curious to hear from you on that, and I'm curious to hear what you're doing with your cash. If you have any clever clever strategies for kind of achieving this upside without downside. I'd love to hear from you on that, what you guys are doing. And hopefully, you got some value out of this today. And let me know what you think. Am I crazy to be parking my cash in these SPACs, or does it make sense to you that could be a smart way to go about it from a value perspective, value investor perspective? Do not, rule number one, don't lose money kind of orientation here. So anyway, guys, again, let me know what you think in the comments, and I will see you all in the next video. Take care.